Hi there, welcome to today's session. Right, so as usual, quick disclaimer first. Since we are talking about live markets and of course trading setups and opportunities, just want to be telling everyone, be aware that whatever we're covering today solely based on educational purposes and do not directly translate to any sort of a financial advice. Okay. And of course, be aware that trading involves risk. Okay, so whenever you're trading, just have a proper risk management in place. Right. So for today's session here, as usual, what we'll be doing is I will run through the markets, highlight some of the opportunities available. Okay, and throughout the sharing sessions, you'll be also looking at the methods based on Elliott Wave as well as SMC, Smart Money Concept. That's basically the methodology that I use to analyze and trade the market. And we're gonna combine a little bit of a multi-time frame as well from the 4 hour, going down to the hourly, and then I'm also looking at some of the intraday setups like 15 minutes. Okay. So yeah, I'll be touching on the strategy perspective as well. Okay, and if you have any questions, just feel free to utilize on the chat and put your questions up so we can look into that. All right. So yeah, with that said, we're gonna get started by looking at the dollar index first, right? An overview, and then we'll jump into like smaller time frames and opportunities for the week. Okay. Good. So dollar index, an update here for the week is that price actually came down quite a bit since last week. Price took out that swing low here. All right, so that's where you can see the break of structure. And of course, right now we're expecting more downside. Okay, however, in the near term, we are expecting at least some sort of a corrective pullback before the continuation down, and the targets right now would be where that previous low is, around 97.90, right? So from an Elliott wave perspective, we are looking at this as a wave 4. Okay, and the current development here would be the wave 5 development, right? So kind of the last leg to the downside. Okay, so this one here, do keep an eye on opportunities to sell the dollar. Okay, if this continue to pull back correctively throughout the week, that's where the opportunity is, and you can see over here the trade plan is to look for sell setup. Okay, and that's the idea for the dollar itself. So if you go over to the euro, okay, it's gonna be kind of the inverse of it, and we are looking at buy trade opportunity. Okay, so kind of the inverse of it anyway. We have this push up, and if you can get a corrective pullback for the week, right, that's where we're gonna look for upside with a target where price would potentially break the previous high at 1.1575, right? So this one here, same thing, right? You'll be looking at the pullback, potentially coming back and test some sort of a liquidity level here and then continue upside. If you pull the FIBs, it's going to be around that 50% mark. Okay. On the shorter time frame, right, on euro dollar 15-minute chart, more of an intraday, okay, it does open up an opportunity to sell it. Okay, so we kind of have like on a high time frame H4, we're looking at upside. But we're expecting that pullback. So in the near term, in the short term, we can look to potentially trade that pullback as well. Right. So in a 15-minute, right, just very quickly run through the simple analysis and setup, right? The whole idea of this is that we have our directional bias established on a H4, right? So the direction here is to look for short-term pullback and then eventually upside, right? So in the intraday 15-minute time frame, we're essentially looking at bearish bias, right? Where we're expecting downside. So we have clear direction that we can focus on a day-to-day basis at the moment. And then what we need is we have a setup, right? So the setup is basically a set of series where we need to see price fulfill certain conditions and criteria before we take the trade. So over here we have a direction bias, which is to look for sell. What we need is then the setup. Okay, so in this 15-minute chart here, you can see that we have a clear top. The market made a move down, the market pulls back, did not break this top, right? And then after that it continues to go lower today, and it took out that swing low, right? So that's where we have the break of structure BOS. Okay, so when that happened, because we had a break of structure over here, this swing high now shifts to this swing high, right? Which means that this is the most recent swing high and this is the most recent swing low at the moment. Okay, so this put us in a place in understanding structure and tell us that as long as price is below this high, we can expect more downside, right? Anyway, on a higher time frame, we've established the buys. Okay, so that is some of the conditions that we need to see in this setup, right? We want to see a clear alignment on the lower time frame with the higher time frame direction bias, right? So this is break of structure, which is clearly telling us the market is going lower. And as price take out this swing low, you can see that, if you're familiar with SMC, there's a term called fair value gap. There is this market imbalance that is left behind. Okay, so what is the market imbalance? What's a fair value gap? If I zoom in, right, in a 3-candle pattern, you can see that this high and this high, this low and this high did not overlap, right? And then you have this huge 15-minute candle over here, right? So that gap itself, okay, between these two candles, that gap itself is basically what we call a fair value gap. All right, so when this setup itself, we have a obvious break of structure. Okay, we have a fair value gap created, we have our swing high, swing low, we have a clear bias that we're looking at, right? At least for short term, we're expecting a pullback to the downside. If you're looking to sell, we can add the final touch of it, which is the Fibonacci, right? So I'll just take from swing high to swing low, and then the 67 Fips retracement becomes where our entry point is, right? So in other words, on the intraday time frame perspective, if price actually can pull back towards this area, okay, where the 67 is, we have a little bit of a confluence of this fair value gap here as well. We can then expect the price to actually continue to the downside, right? And that's where we're going to look for our sell trade setup. Okay, so very simple kind of systematic approach to the market, right? First is the direction, then we look for the setup, which we have a few conditions here that essentially as price completes it, that's how we get it. Okay, so this one here, you can look up for entry somewhere between 1.1384. Stop is going to be above that swing high, so that's at 1.1407, and then your target is just where that swing low is, 1.1337, right? So that gives you about 1:2 risk to reward ratio. Okay, which means that if you're going to risk 1%, if price hits a target, you basically can make back 2%. Okay, so a couple of potential trades has been running here. You can see that this setup here, okay, this move down, this move down, this pulls back. This was actually a pretty solid sell. Okay, again, if I pull the Fips for you to look at, right, from swing high, swing low, you can see very nicely touched the 67, continuation to the downside, break structure. So right now we have another opportunity if price can actually pull back. Okay, so that's on euro dollar, something to keep watch on the intraday 15-minute. Okay, so that's coming from higher time frame down to the intraday time frame trade opportunity. GBP USD, this one here, we are also looking at potential upside in the swing trade perspective, right? So we have this push up where it take out this high, right? So that's your break of structure, so that's definitely momentum push to the upside. We'll wait for a corrective pullback and then we look to buy. Okay, So this one here, short term, we are also expecting that pullback, right? But since the euro dollar and the pound dollar are closely correlated, we're probably just going to be focusing on the euro for now, right? In terms of like trading the short term pullback. So GBP USD, we'll just be waiting for the pullback to complete, and then we'll start to look for upside trade opportunity, right? Look for buy trade setup. Then we have the Aussie dollar. Aussie dollar is coming down as expected. Okay. We are looking at the structure here as a potential crawl, or what we call potential diagonal, right? And the market seems to be reacting as of this pattern right now because we have this momentum push to the downside. Now, oftentimes when we see a diagonal, price tends to go towards where the initial low point of it, in this case here, is going to be around 6340. So that's a short-term target. Okay, so you can see over here in the table, expectation price to make a pullback towards 6340. The trade plan for the week is that we can potentially look for short-term sell. Okay, so we have a clear directional bias. If you go down to the lower time frame, right, this was something that I was setting up in the morning. Price didn't really pull back towards our entry as of now, but the whole setup is still there. Okay, now in SMC we have this concept called change in state of delivery, CISD. Basically it's just an initial early sign of a reversal, right? Because you can see this as a couple of bullish candle, and then the market took out, the low of that bullish candle. So that's the early sign of a change, a shift in direction. Okay, market is still pushing lower, but once this starts to pull back and form a low point, all right, what we can then do is we can start to put in our fips, and then we'll look out for entry over here. Okay, so Aussie dollar, I mean, since the morning until today, price has been coming down quite a bit, so that invalidates the earlier setup. But overall, the direction and the trade plan remains the same, right? Short term here, we're looking at sell trade opportunity. Okay, with a target at 6340. Okay. Then we have the dollar Canadian. So dollar Canadian here, we are expecting some sort of a pullback. Okay, again, we have this stronger momentum push. Price actually took up this low, right? But right now it seems like it's doing its pullback, which we can't expect. As well, if this pulls back is going to be corrective in nature, then we're expecting one more push to complete wave 5. Okay, so right now we're looking at sell trade setup. Our directional buys are going to be bearish overall. Okay, so some of the key levels here, of course, is this here. The market order block will be there. If you take your fib from swing high to swing low, that's going to be where that 50% mark confluence as well. So I would say this one, you potentially wait for the pullback. If it's corrective, you look to sell it. Okay. Then we have the dollar yen. Okay, dollar yen actually pushed up quite impulsively today. Again, not surprising. We were expecting some sort of a pullback, right? And then, of course, eventually, if the pullback is going to be corrective, we are still expecting overall downside. Okay. So high time frame H4, we're looking at this as a WXY. This came down. We managed to take out some of the low points here. So we are bearish overall. Okay, just that the short term, we don't expect the market to just keep going in one direction all the time. So it's traveled quite a bit, so we're expecting that pullback. Okay, now if you jump this to a either an intraday or even on the hourly time frame, okay, it's gonna be the same setup. There are some conditions again that I'd like to share with you in terms of the setup. Very clearly on the hourly, you can see that we have this low, and the market actually tried to break that low. It did break, but it's just a small little tap, right? So kind of a little bit of a double bottom. Then after that, the market went up and took out this neckline. Okay, now in the SMC model itself, what we have over here is this is what we call a liquidity sweep. Okay, meaning aka some kind of a fake breakout. And then when the market successfully break and U-turn, we actually call this a change of character or a break of structure, right? The name is different, but the principle is the same. Basically means that market actually came back, took up the high. Okay, now when that happens, you can see that this entire move is strong in momentum as well. Why? Because it leaves behind this entire market imbalance, which is basically what I've just described earlier, fair value gap. Okay, so when this happens, this is where we get our setup, right? Because we have already a directional bias in the short term, which is expecting that pull back, and then coming down to the lower time frame. Okay, that's where we're looking at the setup to get involved in, right? I mean, right now price hasn't really established a high, right? It's still attempting to go higher. It's still developing, obviously. But at some point in time, the high will be established, right? When the high is established means the market is coming down, it's doing its pullback. Okay, when we have a high established, what we can do then is to take our fips, okay, measure it from swing low to swing high. You can see very nicely the 67 confluences with the fair value gap area, right? So what this means is that eventually, if price actually comes back down, we'll be actually interested to look for the buy. Okay, short term, right? Short term, because we are expecting this pullback. All right. If you go down to the intraday time frame, 15 minute, it's just going to be the same, right? This is exactly what I've drew on the higher time frame. Okay. So that's on the dollar yen. Definitely something you can keep watch on, right? And have it in your watch list. Okay, then we have gold. Very interesting. Right, so we're expecting gold to actually pull back a little bit lower towards the 3240 zone. Okay, and if we can come down correctively towards 3240 and see some decent bounce, then as long as price remains above the invalidation level, we continue to expect more upside for gold. Okay, so this one here, we're looking at upside on the swing trade kind of angle. If you go down to the smaller time frame, there are some opportunities to look to sell. Okay, in this case here on the hourly may not be the best setup. We do have a bit of a conditions that is fulfilled. For example, we have this break. Okay, the market is coming down. We did have the change in state of delivery, but we don't have the break of structure yet. Okay, so we have the early sign that the change in direction is there, but we don't have that confirmation. However, if you go down to the 15-minute time frame, we have the setup in place, right? Obviously, we're still forming low, but if this starts to pull back, then that will be the low, that will be the high. You have the setup, right? So why I say that? Because in the 15-minute chart, you can see that we have the break of structure. Okay, and that forms a swing high. We have a lower low, lower high. Okay, in fact, just this week, we have two very solid sell trade on gold, right? Because you can see same model, liquidity sweep, break of structure, fair value gap over the weekend, pulls back. That's your sell entry, hits your target here, came back up, another entry, hits the target, and then right now we're looking at another opportunity here for gold, right? So this entire 15 minutes down move, right, essentially is the higher time frame H4 pullback. Okay, so you can see from that perspective, right? We're looking at this pullback, and then on the 15 minute, we're basically trading it to the downside. Okay. Silver, for me, it's gonna be just neutral for now. Okay, price is essentially in a consolidation in a range, so there's nothing clear. We're just gonna avoid it. Crude oil. Okay, the market came back and tested the key level around 60.4. Overall, we are actually interested to see an upside bounce, right? So we did on the 4 hours see a nice little double bottom kind of structure. This do carry momentum, right? This is obviously pulling back. As of now, it's pretty corrective in nature. So as long as price remains above the invalidation level at 55.20, we are expecting upside as a focus. Okay. Crude oil here, if you go down to the hourly chart, there is actually a setup that we are looking at today. Okay, which if you are interested and it fits into your trade plan, you can consider have this as part of your trade ideas. So what we have, again, you can see very similar model, right? We have this low, price took out that low, liquidity swept, bring it back up, broke that high, break the structure. Okay, so this model is our setup model. Again, once you're familiar with it, you can use it for your own trading as well. Then as price actually moved higher, you can see we created a market imbalance. That's the fair value gap, right? We pull in our FIB. The 67 retracement is confluencing with the fair value gap, and therefore great, that adds extra points. And therefore we are looking to enter around $60.70. Okay, your stop is gonna go below this, and then a very conservative take profit target is just gonna be where that swing high is, right? Again, this using Fibonacci's to get involved in it, oftentimes your risk reward is just gonna be 1:2, very nicely on average, right? Okay, so this is on crude oil, right? Another opportunity that you can keep watch. Then we have the S&P. The S&P is something that I'm not too into taking this trade, right? I'm just gonna be cautious on this. But as of now, the primary analysis is that we are expecting one more push down towards 5,700 area, and then for the market to continue higher, right? So that is that short-term opportunity. It's just that this is something that I'm not very comfortable in. So personally, I wouldn't kind of like look into taking this trade, right? So S&P, I would just probably leave it aside. Okay. But of course, I'm personally keeping track, right? I'm not very comfortable in this. I'm not taking this trade. But I'm just doing a little bit of a forward test. In terms of like this setup over here. Okay. Now, what I don't like about it is that the pushback up is pretty aggressive, and I mean overall trend is still bullish. So I wouldn't want to be like going against it, right? So that's the primary reason why I'm not very comfortable in it. Right. Next we have the pound yen, which is fantastic. You can see over here. The expectation is for wave 4 to be completed, and we're looking at a push upside, right? So we kind of got that move here today. You can see the expectation is price is bouncing off nicely at key level. Look for buy trade setup if you can get an impulsive break above 194, right? This is basically your 194. Price actually took out that with momentum, okay? So what this means is that going forward for the week itself, we're going to continue to expect upside, and we can start to look for buy trade opportunity. Okay. In fact, earlier this week, we also had a very solid pound yen trade. Okay. Over here, right? So again, you can see this is the setup we have. We have this low, liquidity swept, price went back up. Kind of had a little bit of a change in state of delivery, right? And then of course alignment with higher time frame. We have the fair value gap creation here as well. The market pulls back. Okay, this trade had a little bit of a drawdown during that pullback, but you can see it didn't really tag into the stop, and then it just bounced back up, gets us out at that take profit, right? I know some traders actually would choose to trail it as well, because kind of highlighted to them. It's an option to trail your targets because of the higher time frame alignment. Okay, if you trail it, that's great, because today if you don't trail it, it's fine as well, right? Because you're kind of aiming at like average 1:2, you kind of get that anyway. All right, if you can't follow that stop, it's about 1:2. Now, if you trail it, then my personal suggestion is always, take partial off, and then you can potentially trail it further, right? So if you kind of decide to trail it right now, this trade is running close to like almost 1:5, right? Almost 1:5, which is fantastic. Okay. Now, is there more upside potential in the pound yen? Absolutely, right? Because if you look at the forward time frame, the minimum expectation is for price to actually take out this high, and it can actually go higher from there, right? So, congrats for those of you who managed to catch that at the bottom here and trail it, right? I mean, if you're not in it, don't chase it. We'll just wait for the next setup, right? Essentially, what we have here is a break of structure. Okay, potentially there's a swing low. You can see massive momentum, a lot of market imbalance. Wait for the pullback. That's your opportunity to jump in again. Okay, so that's on the pound yen side of things. Odd yen here, slightly different structure compared to the pound yen. This one here we're looking at a pullback. If you can get a corrective pullback, we'll be interested to sell it, right? So we're looking at a structure where this is slightly developing as a three-wave move, then only maybe upside. Alright, so this one here, probably you need to be patient and wait for market to enter into the key area, and then we'll look for a sell around that zone. Okay, so nothing much as of now. Pound odd, it's pushing higher, right? So I think this one will probably need to update the analysis and the view count a little bit, because it's basically invalidating that level already. Okay, so what I would do here is I would basically clean this up a bit. Okay, because it's invalidated. We are looking at a possibility where this zone is something that price might test. Okay, so the important thing, right? This is a good opportunity to talk about as well. The important thing is you don't want to just be buying or selling just because you have a direction, right? That's where the framework of DSC comes in, right? You have a direction, you need to have a setup, right? So in this case, you have an expectation, right? You can see the expectation is price to move lower. We look for setup if we get an impulsive break below, but we did not, right? So in other words, you don't need to worry about it, right? You just need to update your analysis because the price is telling you otherwise. So what I would say for pound odd right now is that it's probably just going to be neutral right now. You want to be patient, see how price is going to react around this area before making any conclusion. Okay, so this one here, nothing much as of now, nothing much as of this week. Okay, lastly we have Bitcoin. So Bitcoin over here is the expectation is for it to pull back, but overall direction is going to be bullish. Okay, so we're going to be expecting more upside. Short term here, maybe we're going to get a pullback, but my take is you probably don't want to be looking at a short term sell, right? Because Bitcoin is carrying a lot of momentum to the upside. So trading the retracement is a bit higher risk, and something that I'm not going to be very comfortable with, right? So this one here, I would personally suggest just be patient, stay out, wait for a market to pull back, come into our key area, and then look for the buy. Okay. Yeah, so those are the couple of things that we have. I think euro dollar in intraday time frame seems to be building up pretty nicely. Okay, something we can consider to be looking to trade it to the downside right? So if I'm gonna set this up, the entry is gonna be 8.4. Your stop is gonna be 0.7. So that's a 20 pip. You can do a 24 pip stop. How does that work out to be? Yeah, 1:2, right? So let's say we look into this. This is gonna be a 24 pip stop, right? So basically, I'll use a position size calculator to calculate based on the 24 pip stop. Can use about 4.16. Yeah, so very quickly, let me just put this panning order in, since we're here anyway, right? Okay, yeah, so this one is an intraday 15-minute. Or ideally, as a 15-minute trade setup, the trade itself should be done within like 24 hours, right? Which means today, if today the market gets us in, likely you get a result by tomorrow morning, right? So let me just double check if there's any important news coming in as well, right? So intraday, you want to just be a little bit more sensitive to this. Yeah, I mean, there's really no really important upcoming one other than FOMC. But FOMC, it's not gonna be like a very crucial one on Thursday anyway. That's like another day, right? So yeah, this one here probably something that we can look into. 4.16 lot is the calculation, right? 4.16. So this would be a sell limit 1.1384, stop loss 1.1408, and then the target here is 1.1336, right? Okay, so that would put us very nicely 1:2 ratio. Good. Okay, that's basically the process that I use to analyze and trade the market. Hopefully give you some ideas and insights for the week. Right. So far I don't see any questions coming in, so I'll assume everything is good. Hopefully it's clear for today's session, and you gain a little bit of insights into what to look out for in the market, what is the strategy and the approach, okay, and you learn and take away something, okay. So yep, all the best for the week, and I'll see you guys in the next session.